Okay, team. Here's another example of trading the volume profile in combination with the opening range, in combination with um, the opening range breakout and the naked POCs. So let's go back to this session here. Let's highlight the high. So we basically are doing our opening range here on this particular session. Let's look for the low. Looks like the low was made right here. So we're going to highlight this area here, red, as basically resistance and support. So this is a day before. So this is the session in which we are going to participate. This is the day before session we should be looking at before we decide to enter the market. And we need to do our profile analysis. So a couple of things that I want to identify here. Number one, here we have, I mean, we have some discussions about this. This is a low volume node. Okay, so you see a low volume node basically doesn't have a lot of volume. Is a skinny portion of the profile here, right? And then here we have a high volume node. We're gonna clone this one. The high volume node is right here in this area. Let's just make this one low volume. Let's just make it purple. High volume. We have another high volume here. But let's focus on the high volume on the top. If you take a look at it, it's pretty close to being the POC for the session. How do I know? Because if you get a vertical line and you draw that line here, you're gonna be able to see that they're pretty much the same. It looks like the POC extends a little bit more past this way. So they're pretty much in the same line, right? So I just want to highlight that particular case in here so you can pay attention to it. Then we have our value area high, the blue line here, first blue line. Um, let's just make this blue line dash so I don't confuse it with any other blue line. And I apologize because the chart's getting busy as we add things, but this is the analysis that you should do to your previous session to understand what happening here and understand what can potentially be happening in the next session. As we discuss in the different profiles that we have, this is a perfect example. I believe that I alluded to this particular one in the previous scenarios. Here we have a double distribution profile. Why a double distribution? Because you can see how the low volume node that is here separates the distributions. Wow, this is equally, I don't think I ever seen this before, to be equally the same. Um, it's pretty cool. So this is a double distribution. Distribution number one, distribution number two. It happens to be a B-shaped profile as well. Uh, so you can go back and read the definition of the different profile shapes and what do they specifically mean when it comes to trading. So knowing this particular information and knowing that the next session opens here, I know I have a POC towards the bottom, and I have value area high, value area low. So this information here doesn't exist. So basically, if you take a look at it, I can just cut it right here, and that doesn't exist. So this is my analysis from the day before, and none of this has happened yet. So let's recap real quick. So here we have the POC. So what I'm gonna do with this POC is I'm gonna make it super big, and um, we're gonna leave it just right here. Uh, and I promise you, I have not look at this particular example before, so I don't even know what's going to happen. I know that we have an opening range here. I know that we have a low volume node here, and this is something that we're going to discuss down the line. But this right here is a single print, and I know you guys probably don't know what a single print is, which is okay. So single prints, the price comes from above, they act as a magnet for support. So in fact, we're going to put in a magnet over here because that's what single prints are. They're magnets. Low volume areas are very important just because price has a tendency to gravitate to those to see, if market participants are really interested into getting into the market. If you take a look at it over here, you will see that that low volume area that is here was formed with this particular uh, session here, or aggregation, whatever you want to call it. And the beautiful thing about the profile is that you can get this profile here, which is basically uh, um, the flexible volume profile. I can just profile those two candles and know that the POC is 38 452 in this particular example. So that's the beauty of the flex volume profile. We're not going to focus on the previous session. I don't really want to spend too much time talking about it, but it's pretty important to understand that when market came down here, it came down very hard. So that's the reason why this happened. Just to fill this area here, because this area here was also low volume node on this particular profile. I don't want to continue going backwards because I will probably go back and review more days. But for the purpose of this particular exercise, so let's see what happened here when price got close to the POC. I don't know if it touched it. I don't know if it did. But if I were trading this particular example, I would be looking at this area here for a long opportunity. So the trade will look like this. So now we're using volume profile, uh, opening range breakout, and we're using the N30's. So we're using a combination of three different concepts blending together to find opportunities. There's the reasons why this is an intermediate strategy because you're supposed to study really hard and come up with different examples and backtest the same things that I'm doing right now to understand how price behave in certain areas. So if you're not doing that, you're doing yourself a disservice. For the purpose of learning, you should be doing exactly what I'm doing in your spare time to backtest the strategies and make sure that you're seeing what's supposed to happen before it even happens. So if I were developing a trading plan for this, knowing that this is the activity from the previous day, what I would be saying to you is pivot is 38 426, or I operate in zones. So those that trade with me know that I look at zones. So the pivot would be 38 443 to 407. So this would be the pivot zone. Okay, so if I'm trading from pivot, my trade looks like this. So price is coming from above. This is the POC from that session here. You can see how it hit it right here and it rejected. Okay, so what I'm going to be targeting in here is the POC. Well, I don't have a POC, but this is the beauty of having the profile plotted in your charts. I can see that the value area high here hasn't been touched. So in the example before, I didn't know that until I extended this line here. So now I can target the high of the previous day because now I have a reference point. And this actually is a beautiful trade because it's a 3.31 risk reward. Okay, I don't know what's going to happen. I have seen the example that I recorded before in this particular instrument, but so my stop in this particular trade, I will have probably put it. I'm gonna just leave it. I'm just gonna leave it. I have this red line here. I shouldn't have that red line there because now I know something that I should not know. But this was the opening range from the previous day. So I'm just going to use the opening range from the previous day as my stop. So the first 30 minutes, remember I told you that this is the high and this is the low. Okay, so I'm gonna use the high of the opening range as my stop, right? Because if it breaks through here, the next target is gonna be this, and this basically is a range that I'm not willing to give away those 30 points. 3 times 5 is $150. So I'd rather just wait to see what's gonna happen when it hits this price here to enter a position. But as of right now, before the market opens, I already know what I want to do, and this is what I want to do. That I want to hit the previous day high, and I want to buy the low volume node, which is the confluence with um, this particular area here that I looked at before, which is also a low volume, and also the value area low from the day before, from 2 days before. I know I have a virgin value area high that hasn't been hit, and I know that price is above, and this is gonna be a magnet here, and I want to watch the reaction right around here. So let's this one play out and see if I can do a better job managing the position as it plays out. So market opens right here. Let me make it a little bigger. You can see how it tagged the area. We're operating zones. So that will be the entry right there. Basically hit our entry. And this is not based on the opening range because the opening range hasn't been plotted yet. We haven't traded for 30 minutes. So this is just based on a pivot. By the way, these are RTH only. So this is just the regular trading hours. In this trade, you are risking 74 ticks to make 278 ticks. Every tick is a point, every point is $5. See how the resistance hit here? Because it's a high volume node. And now stalling around that area. I think this is the place where it rejects. It just breaks through it. That's a good sign. Oh, almost hit it. If I were trading this, obviously, I would have probably gotten out. That's why we have to operate in zones and not necessarily look at the exact price because it's always going to be market participants that are willing to be more aggressive and enter the market uh, really quick, preventing price from reaching certain levels. It almost hit it again. I think it might do it now. No. See, the rejection is bigger. That's so funny. We're still in the trade. At this point, you're probably risk free, meaning that stop losses uh, at minimum should be a break even. And now here's target right there. So I'm gonna make it go a little faster now, and I'm gonna try to get into a position. Uh, so let's go back to a buy replay, and I'm gonna replay it from here, and I'm gonna try to buy it when it gets to here. Hopefully I can buy it. Once I buy it, I'll go a little faster. So we'll let it play out. I'm gonna try to buy, put a stop, and put it in order. I know the trade's gonna win because I already seen it, but I'm just gonna try to illustrate the entry. Remember, price is coming from above, so market just opened, comes down into the area. I buy it right there. Perfect. Here's my stop loss right here, $515 per contract. Here's my take profit here. I'm gonna put it a little below because I always do. So I should be out of the trade quicker. So trading view tells you exactly how much you're gonna make in this trade, how much you're risking. And I will tell you when to move the stops to break even. It will be when we break this structure right here, or when we break out of this opening range after the first 30 minutes. So right now is 10:08, so that range is set. You can see what the POC is for the session. So it broke the range. Now I move to break even. My stop is like right here. I bought a 460. I moved to like 465. Right there, $30 in profits. My stop. I'm gonna hide all the different drawings in here so you can see how the profile is printing. I'm gonna hide the and just leave that one there. You can see how the POC is right here. It never moved, so that is acting as support because the volume is here. So this is a buy volume happening here, and the trade just closed. And as you can see, $1,278 because we knew exactly that this area here was going to act as support, low volume. And you can look at the definition of the low volume areas, and our entry was the low volume area, which happens to be a single print. We enter in that area and we target the previous high. The confirmation for this trade was once we broke above the opening range high, came back and retested, and the trade continued to develop. Yes, it came back down into some areas, but our position was never compromised. So I just wanted to give you this additional example. Basically, reinforcing the three different strategies that I use. Well, I use more than that, but because I watch the price action, it all depends on what I'm seeing. But I'd like to get confirmations once I see something confirming the strategy that I utilize to enter the trade with. In this particular case, I will have used this area as a single print here as a support, like I was saying before, as my pivot. So, pivot means we're going to pivot from this area. It's a pivotal area. So, meaning that above the here, we're looking for longs, and below that, we're looking for shorts. And I will explain a little bit more about the trade plan execution in another lesson. But until then, I hope you enjoy this particular example. Have a great day.